You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
In today's show, you'll be hearing from Rick Rule, the president and CEO of Sprott U.S. Holdings, a frequent guest. Rick, welcome back onto the show. And let's start off by getting your observations. And specifically, I want to know, how does Sprott go about wargaming what we're seeing in the United States? You haven't seen us, you haven't spoken to me in the last 2 months. A lot has happened. Political tensions are at an all-time high, at least for my lifetime. And we've seen some things that I wouldn't have thought we would see in the United States. And we have a Democrat president, a Democrat Senate, and a Democrat House of Representatives. How does Sprott wargame all these things? And what are the key takeaways the investors listening could see for 2021?
I'm laughing because wargaming is an interesting choice of words, given the last couple of weeks. My belief is that the current level of social and political tension in the United States is really a function of politics. When people come to believe that they are entitled to things, either on the right or the left, and they believe that they're entitled through the political process to prevail against other people, the tensions and circumstance that we have in front of us are, I believe, inevitable. Markets function better than governments. Reactions and interactions between people need to be consensual and voluntary. Now, markets are very messy, and some people don't believe that they benefit sufficiently from an politically unmediated process. But the truth is that the circumstance that we see in front of us, various warring elites, I think is the sort of inevitable result of politics. I remember once hearing someone say that to understand politics, you need to look at the root of the word. Poly from the Latin, of course, for many, but tick was from the English colloquial for small blood-sucking insect. And if you think of the political process as being a war amongst small blood-sucking insects, then the circumstance that we have in front of us is, I think, probably the logical conclusion. Remember, too, I'm a bit older than you. I guess people looking at both of us don't need to be reminded of that. But the decade of the 60s and the early part of the decade of the 70s experienced the same sort of social turmoil in the United States, albeit more socially and less politically oriented. So we aren't in uncharted waters. How do we get out of this? I really have no earthly idea. The idea that for somebody to get ahead, they must necessarily victimize somebody else through the political process doesn't seem like a recipe for peace to me. But my hope is that people develop other forms of communications like independent podcasts. As for the Democratic ascent to Congress, a different warring elite is ahead now. A group of politicians representing a different political constituency is in the ascent. Another wonderful quote from H.L. Mencken defines elections as advanced auctions of stolen property. So a different group has emerged as high bid, and that will be interesting. My suspicion is that whoever ascended to office, we would have seen more deficit spending. We would have seen more debt. We would have seen a continuation of artificially suppressed interest rates, which is to say that the ascent of either party probably would have been good for the precious metals thesis, bad for the country.
Would the last 2 months and what's occurred in America not change Sprott's view on 2021 at all? Would that be fair to say then?
Not at all. I think that some disenfranchised Republicans may become more concerned about the economy under Democratic leadership than they otherwise would have been. And that may lead to some near-term interest in gold, similar to the near-term interest in gold that was expressed when Mr. Clinton came into office. But my own belief is in terms of fiscal rectitude. The parties are respectively Tweedledum and Tweedledummer, sort of the same.
One more question that deals with politics before we move on to more specific resource investing questions. This whole idea of the Great Reset and the World Economic Forum, they put out, in my opinion, a ridiculous video. And at the beginning of the video, they told me that in 10 years, I will own nothing and I will like it. So what do you think about this Great Reset movement? And are you as an investor doing anything, I would say, to protect yourself against it?
Well, as to my own personal responses, yes, I'm doing something, and I'd prefer to keep them to myself, frankly. The most lethal snake is that which doesn't rattle before he or she strikes, and I'd like to put myself in that category. And I don't think really that the World Economic Forum represents the thinking of the people worldwide. I think it represents the thinking of the big people worldwide. It reminds me of the Club of Rome before your time. Jeremy Rifkin, Jimmy Carter, and that whole range of morons who decided in a Malthusian sense that by the year 2000, the world would have run out of oil, it would have run out of food, all those types of things. The reality was, of course, very different. As to the World Economic Forum thinking that I would be happier shorn of my possessions, I would suggest that they remember that that's my business, not theirs. And I think that most of the world in fact, feels the same. I saw their list of risks that face us in this decade, and they didn't mention the risk of confiscation of private property, otherwise known as taxation. They didn't mention excess regulation. They didn't mention restrictions of trade. They didn't mention the arms buildup or war. Which is another way of saying that they didn't mention that collective madness known as government, which is, from my point of view, the greatest risk that we all face. I note, too, that when the World Economic Forum makes postings on LinkedIn, which is where I watch them, they would seem to me to be innumerate and totally uninformed with regards to economics. I wouldn't object so much if they renamed themselves the World's Leftist Narrative Forum. I would understand that completely. But despite my best efforts to read the stuff, and occasionally they get something right, which gives me hope, I have little regard for that organization.
In regards to early stage exploration stocks that you speculate in, you've been doing this for at least 4 decades. You hired a geologist such as Brent Cook, Andrew Jackson, and others, and that you hire as brokers, even geologists at Sprott. So I was thinking about this, and I wanted to ask you, do you think that the geologists, when it comes to early stage exploration, have they made you more money than you would have been able to make on your own? And how often are they accurate or good at giving you suggestions?
Remember Pareto's law, which suggests that 80% of the positive utility is contributed by 20% of the population, and that those performance dispersal curves align conformably again. A really good geologist is invaluable. And I would say that one of the few real competitive skills I have relative to other portfolio managers is I am really good at hiring geologists. I've done it for 45 years. The guys you mentioned, Brent Cook, Andrew Jackson, Justin Tolman, Gordon Putnam, what an honor roll of superb geologists. And they have both made me a ton of money and kept me from serious mistakes. Now, it's very important when one hires a geologist or one brings on a consulting geologist or one chooses a geologist that one listens to understand that each geologist, each scientist, in fact, each human being has things that they're really good at and things that are not so good at. They're not so good at. Brent Cook, as an example, in tertiary volcanics, in accreted terrain, in basin range geology, is so good. He's applied empirical processes so long that he's become intuitive. So it isn't just geological skill. It's the person consuming the information's job to understand the biases and the specific competitive expertise of the geologists. But once you do that, they're absolutely invaluable. My friend Robert Friedland was recently quoted as saying, in our business, the geologist is God.
And he likes to empower the geologists too. I've heard him
He
speak
does.
at your conference.
He does. He does.
Trilogy Metals is a world-class developer in Alaska's Ambler mining district. The company already possesses 8 billion pounds of high-grade copper, 3 billion pounds of zinc, over 1 million gold equivalent ounces, and over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion with a 33% internal rate of return. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades in New York and Toronto under the ticker TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com.
How do you view, and how does Robert view, artificial intelligence in exploration? Do you think that this is more of a good narrative for companies to push at this stage, or do you think it's proven effective?
I don't think it has proven effective, but I think it's a wonderful tool in the box. I think that you are going to have to input a lot more data for AI to access. But what AI really does is it eliminates a bunch of the drudgery involved in geology and allows the geologist to simply think. Too often, if a geologist has a 6-week assignment, 5 of the 6 weeks is spent reviewing history manually. The idea that AI could speed up that process so that all of that data was collated and organized and systematized on a computer in 2 or 3 days, so that then the geologist took that information and thought about it, ground truthed it. That's the real premise. The idea, as an example, that some supercomputer is going to replace Brent Cook or Andy Jackson or something like that, ain't no way. Ain't no way. But the idea that in particular the younger geologists will be able to organize the processes in AI in a way that reduces the amount of time that they have to spend familiarizing themselves with history and data. That's a very different circumstance. So much the better.
The lithium miners have been breaking out recently, Rick. One lithium miner or developer, Lithium Americas Corp, on the New York Stock Exchange is up an astonishing 200% nearly in the last 30 days. Is this a real breakout for the lithium miners that you think we're going to see sustained?
I don't know about the lithium juniors. I think that demand for lithium is growing fast enough that it continues to outpace finished product supply, which is to say that we don't have a shortage of lithium. Remember that I come out of the geothermal and the oil and gas business, where lithium is regarded as a brine, a waste product. What we have is a shortage of facilities to convert various raw lithium minerals into finished lithium products. And I think the best opportunities in the lithium space continue to be the very large lithium producers, which have the ability to debottleneck productive facilities. Will the juniors continue to do well as a consequence of lithium narrative? Absolutely. But would I put my customers' money there at the expense of the seniors? Absolutely not.
That makes sense. What about the green energy movement, especially now that we have a Democrat-controlled federal government? Are you putting more weight in this narrative?
No. We've been putting weight into the narrative for about 4 or 5 years. Probably the greenest of the green minerals is copper. It's a boring topic. People around the narrative want to find some material that nobody's ever lost any money in, that only occurs in first world jurisdictions, and preferably one that they can't spell. The money will be made in nickel. It'll be made in copper. It'll be made in cobalt. It'll be made in lithium. It'll be made in much broader markets. And in particular, if people want to go into the smaller markets, they're going to need to go into some jurisdictions that they're uncomfortable with. Rare earths would be an example. You know yourself, Bill, they're not very rare. The reason why there isn't much production outside of China has been that the Chinese have been so efficient that nobody else could afford to look for the stuff and produce it. Now that the Chinese, for very good reason, are imposing higher environmental standards in Western China, their cost to produce rare earths will go up and other parts of the world will be more competitive. But those other parts of the world might be challenging. They might be pegmatites in, say, Bolivia or Mongolia or Russia or Congo. So people who want to play the game need to be informed by the narrative in terms of deciding what they want to play, but they need to divorce themselves from the narrative right after that and pay attention to economics, not narrative.
Mm-hmm. And on the idea of narrative, that's what brings a lot of retail speculators into something like rare earths. And I had a seasoned resource investor tell me in the last month, Bill, just stay away from a lot of these niche metals, because he said, I've been doing this for decades and almost everybody that I know lost money, not made money. And he said the key thing you got to look for is for the industrial buyers, that they'll come into copper, they'll come into nickel, but they don't come into these niche plays as much. You think this is wise advice I was given?
Really good advice. And let me expand on it. Let's say that you have a little tiny market with some unpronounceable substance, a polysyllabic substance that goes into a cell phone or something like that. The cell phone buyer is more concerned with security of supply than he or she is with price. And so if you have a little tiny penny dreadful, unpronounceable mining or something like that. And then the other side, you have Glencore. And both of them are looking to supply this unpronounceable metal to Mitsubishi. Mitsubishi is going to buy from Glencore. They're not going to buy from unpronounceable ink, irrespective of price or grade, because security of supply is more important to them than anything else. So in these little markets, what you find happening is that the market comes to be dominated by companies where the substance isn't important to the company, but the company is all important to the substance.
Yeah, very good advice.
Doesn't mean stocks won't go up. So if you are a good journalist and you can understand the impact of a story on a market, there is money to be made as a trader. But don't think of this as speculating or investing.
Mm-hmm. Great advice, Rick. A couple questions, I should say, regarding your company, Sprott, as we conclude here. First one is, when you are given a CAPEX loan to a developer to build a mine, what do you want to see for a gold developer, let's say, in terms of them hedging their production? What would you require out of them to make you feel secure in the loan that you're issuing them?
We typically don't require hedging, which is one of the things that sets us apart from other capital providers. Sometimes that means that the other covenants on the loan to value, sequential releases, as an example, are somewhat more strict. But we understand that part of the issuer's cost of capital is the shareholder's belief in the optionality of the equity with regards to the commodity price. So wherever possible, we try and construct a loan intelligently enough that we don't require the producer to hedge. That said,
even when it's a 4 or 5 year, 6 year build out, and who knows what the commodity will be priced at then?
I think there are ways that serve the common shareholder better than a hedging requirement. For myself, if an issuer's board of directors decides that they want to hedge enough that they can amortize the loan and recoup capital, I personally feel that that's an intelligent circumstance. Unfortunately, being intelligent often penalizes your share price, and we understand perfectly that the sense of optionality is important to the market capitalizations of some of these companies. It's important to note too, Bill, that with regards to ourselves, when we do construction loans, if somebody's borrowing, say, $300 or $400 million from us over a 5-year term, we're not giving them $300 or $400 million up front. We're giving them perhaps 15% of the loan, and then as various completion milestones, construction milestones take place, we're releasing more money over time. The same way that you would see a construction loan for a skyscraper or a hotel or something like that. So the risks that you see us run are maybe less than the risks that you had described. But as I say, one of the competitive advantages that Sprott has had is that we typically haven't had to force our borrowers to hedge, which is their shareholders' preference.
The Sprott share price had a nice run from the March lows of last year until about the end of August. It's about 30% off of that high now. So for 2021, as investors look at Sprott Incorporated, is the main catalyst going to be the gold price, which is external to Sprott, or is it going to be something internal to the company? And what would the internal catalyst be that we should look for?
We have plenty of nice announcements to make, we think, which is to say new ways to serve to serve the market, new ways to serve investors, which should increase our assets under management. And as a consequence of increasing our assets under management, our management revenues should grow, I would hope, much more quickly than our expenses, which is to say that our cash flow, which has really been growing, should continue to grow. One important impetus for us in 2020 was the migration of our principal listing from the Toronto Stock Exchange to the New York Stock Exchange. Reflection of the fact that most of our business is denominated in US dollars. Most of our shareholders are American, and most of our investors are American. The other side of that is that the New York Stock Exchange is a much, much, much deeper and more liquid market, and interestingly is underserved in natural resources, while the Toronto market is overserved. This isn't to insult my Canadian counterparts, but rather to say when companies acquire a certain size and stature, shifting to the senior listings, shifting to the New York Stock Exchange is something that they should absolutely look at.
Okay, well, thank you, Rick. And the Sprott Symposium for this year, is that going to be virtual again? Any information you want to share here?
I'm almost certain, 99% certain, that the symposium will be virtual. For one reason, the people who put on the symposium are American, and the symposium takes place in Canada, and right now we're not allowed into Canada.
That's a good point.
That sort of constrains our ability to do a physical symposium. I was terrified, Bill, last year about our ability to put on a virtual symposium. And the product that we delivered exceeded my wildest dreams. And we've had months now to perfect what was already a pretty good process. And there were some interesting byproducts of doing it virtually. One was that people from 30 different countries who otherwise probably wouldn't have been able to attend a live function were able to be there. The second thing that happened is that speakers that we have wanted to have for a long time, but who couldn't or wouldn't come to Vancouver, were perfectly willing to engage with us virtually. So I must say, although I love Vancouver and I love taking you and the rest of our guests out in Vancouver Harbor for a harbor cruise, which you can't do virtually, the fact that we've had to migrate the conference to a virtual product has turned out better than I had any reason to expect, Bill.
Excellent. Well, I'll put a link to in the show notes to the Sprott website where you can go if you would like Rick and his team to review your natural resource portfolio. The instructions are also in the show notes, and Rick will be talking to you again in a couple months. So thanks for coming on today's show.
Yeah, I really want to reiterate that offer. You know, your listeners have enjoyed it. I personally, of course, with the assistance of the whole Sprott team, will review people's natural resource portfolios, ranking them 1 to 10, 1 being best, 10 being worst, and commenting individually where we think our comments have some value. So please check out the link. We're happy to do it. We learn probably as much as we teach you. So we're looking forward to doing this.
Excellent. Thank you, Rick.
Thank you, Bill.